Big news this month. The Fed just made its first rate cut of 2025. Mortgage rates have softened to the lowest levels we've seen all year. And here in San Diego, we're seeing a shift in how supply and demand are balancing out. And in this update, I'll walk you through what's happening nationally with the rates, how that's impacting our local housing market, and what those that are thinking about buying or selling a home need to know as we head toward the end of the year. I'm JR St. Julien with the St. Julien Real Estate Group of eXp Realty, and welcome to my San Diego housing market update for September 2025. Let's dive in. The Federal Reserve cut rates in September by 0.25%, bringing the benchmark rate down to a range of 4 to 4.25%. They call this a risk management cut because while inflation is still elevated, especially with the tariffs pushing up prices, the bigger concern right now is starting to become the labor market. Job gains have slowed, unemployment has picked up slightly, and risks to employment are increasing. Looking ahead, the Fed's projections show we could potentially see 2 more cuts before the end of 2025, but they have made it clear that this will be a data-driven process. Okay, so now let's talk about Treasury yields and mortgage rates. The 10-year Treasury yield, which mortgage rates closely follow, tells a story here. It peaked at 4.77% back in January. Then it bounced around in the 4.3 to 4.6 range for most of the year, and then it started trending down at the end of August, and today it sits at about 4.1%. That has translated directly into softer mortgage rates. The average 30-year fixed mortgage rate is now 6.26%, which is down from the 6.89% peak that we saw in late May to the lowest levels that we've seen all year. And for VA and FHA loans, I'm now seeing rates come in below 6%. So this is giving buyers more breathing room, and we're starting to see it show up in the San Diego housing market numbers. So if we look at July and August data, the most notable shift is that pending sales picked up in August, a clear sign that demand is improving as buyers respond to these lower mortgage rates. Closed sales also improved month over month, although they do remain softer than last year overall. On the supply side, new listings are starting to slow down as we move into the fall. August new listings were 13.1% fewer than the new listings that we saw last August. Now, it is typical for new listings to start slowing down in the month of August with the normal seasonality of the market. But this change was a much more significant shift than what we normally will see. And this is important because we have seen the trend of inventory rising for the entire year. And this sudden shift to fewer new listings coming to market could mark the end of that trend with a possible shift in the opposite direction. So this is something that we will be closely following in the months ahead. Okay, so now let's get into some of the details within the details presented by the market data that we're seeing. You've heard me say it before. The story for detached and attached homes is not the same. And this trend is continuing. Pending sales are stabilizing in both markets, but detached homes are holding steadier compared to attached homes, which have seen sharper year-over-year drops. Detached home inventory has risen, but attached homes have seen a much steeper climb, creating more negotiating power for condo and townhome buyers. Detached homes continue to show stronger price appreciation, while attached homes are seeing more modest gains. And homes are sitting on the market longer overall, but the increase is far more noticeable for attached properties. So in short, detached homes remain more balanced, while attached homes are leaning more toward a softer market. Okay, so what does all of this mean as we look ahead? Well, August gave us a hint. Pending sales increased, which shows demand is starting to strengthen as buyers take advantage of the slightly lower interest rates. At the same time, new listings are slowing down heading into the fall, which can be usual, but it seems to be more of a steeper drop than usual. So we need to keep an eye on these numbers to see if a new trend is developing. Now, here's what's happened every year for the past few years. Every January, we see a pop in demand, creating increased buyer competition. And based on what we're seeing right now, lower rates, higher inventory, but reduced new listings coming to market, the setup looks very similar. Now could be the perfect opportunity before demand ramps back up in early 2026. So here are the key takeaways. For those thinking about buying a home, right now you have a window of opportunity. Rates are lower than they have been all year. Inventory is still high and competition is still softer than what we typically see in January. So if you've been waiting, this is your chance to get in before things heat up. And for those thinking about selling a home, the market is still moving, but buyers have more choices now than they did a year ago. That means pricing, presentation, and strategy are more important than ever. If you're selling a condo or a townhome, be especially sharp with your approach, since that segment has more supply and slower movement compared to detached homes. Okay, that wraps up my San Diego housing market update for September 2025. If you found this information helpful, please make sure you hit subscribe so you don't miss my future market updates. And if you're thinking about buying or selling or just want to talk strategy, I'd love to help. Reach out anytime, call or text or schedule a time on my calendar with the link in the description below. I'm JR St. Julien with the St. Julien Real Estate Group of eXp Realty. Thank you for watching, and I'll see you in the next video. Take care.